All right, guys, it's Tuesday. It's going to be a short news day because, honestly speaking, there's not a lot of news in terms of earnings wise. There's not a lot of earnings yesterday, which is why it's going to be a little bit boring. But for today, we're going to have AMD, we're going to have Airbnb, we're going to have Starbucks. We are going to be having Pfizer, which will be reporting in a few hours. It's going to have SD Lauder, which is going to be reporting in a few hours as well. BP. Which basically have already gotten a hit from the Russian exit for oil. Afterwards, we also have Match Group, which is coming in for the after hours, and afterwards AIG. So yeah, I think the important ones will most likely be your AMD, it's going to be your Starbucks, your Airbnb, and those are just basically the important ones. All right, so anyway, let's cover some news today. All right, so stocks climb. Hold on, let me just bring it up for you guys. Stocks climb after the worst month since 2020. I'm pretty sure that this is already been happening, especially for yesterday. If you were looking at the market quite closely, ever since we had the market open, you have seen crazy volatility happening to the S&P and the QQQ. Which basically just go up and down, up and down, up and down, showing strong volatility for at least a one whole percentage point every 30 minutes or so, which is quite scary. Afterwards, basically everything kind of just simmered down, and then nearing to the end of the market open, basically everything just shot up again. So really, really volatile market that we had yesterday. A little bit weird that we're actually having such a market, but something that's going to be interesting, even more interesting than this, is over here, which is 10-year Treasury yield hits 3% for the first time since 2018. And for people who do not understand what hitting the 3% Treasury yield actually means for a lot of people, what this actually means simply is to say that people are actually expecting in the next 10 years, okay, or at least from this period on, for the next 10 years period of time, is going to be quite volatile, and chances are that we expect the Treasury yield to be at least 3%, aka everything else will most likely be about 4 or 5%. It means that we are actually expecting more volatility to actually come. If Treasury yield actually come back now to about 1%, 1.45%, or 1.6% or so, those rates are going to basically means that we're actually quite confident in the economy. There will not be a lot of volatility in the market, and chances are the Treasury would not have to actually give us a bonus percentage point or basis point in order for us to actually stay invested in the market and such. A little bit sad for us to really see 3% for the first time since 2018. But of course, that is also a very, very worrisome thing. But at the same time, for people who are in the bond market, this is absolutely fantastic for you guys, because if you're in the bond market, 3%, you're going to be getting quite a good return on those bonds purchases and such. This is just a very, very short update on the bond side of things for people who are interested in bonds. All right, next up, we got Spirit Airlines rejecting JetBlue bids, sticking with the Frontier deal. So if you actually check back in the first quarter of 2022 or the last quarter of 2021, we have a lot of acquisition deal with Spirit Airlines, be it with the JetBlue or the Frontier deal. Right now, she came out to say that we're not going through with the JetBlue deal. Rebuffed a 3.6 billion cash takeover bid from JetBlue, saying a deal is likely can be completed and is sticking with its plan to merge with the rival budget carrier Frontier Group Holding. JetBlue offer to Spirit came with a higher price tag than Frontier cash and stock offer, which was originally valued at $2.9 billion. However, Spirit's board said it believed there was too much risk that regulators would bar a merger with JetBlue even after JetBlue pledged to share assets to win regulatory approval and to pay a $200 million breakup fee if it was unable to complete the proposed acquisition for antitrust reasons. I think this is like a very, very small version of the whole Twitter acquisition. I don't think that this is going to be on the same level at all. With the whole JetBlue offer for Spirit to Jetblue actually gave a higher cash evaluation bid over of $3.6 billion as compared to Frontier's offer of $2.9 billion in the merger as such. But if they were to actually go with the $3.6 billion cash bid takeover, there's a very good chance that the whole entire deal might not go past. And if they actually go through with a regulatory approval or any form of an acquisition antitrust issues that happen, they have to pay a $200 million breakup fee, and I don't think that Spirit want to go through that, which is why they much rather just merge with Frontier. Something a little bit interesting on that part. All right, next up. In fact, lastly, actually, we have had some message on interest rate path destination will be scrutinized. This is quite a crazy article, in my opinion. Investor turning into Federal Reserve Chairman Jerome Powell news conference Wednesday will focus on his comments on how high interest rates might rise beyond this year to combat inflation, which tomorrow I'll also be doing an additional video on my expectation for FOMC meeting as well. So if you're interested in that, just stay tuned for that. All right, so afterwards we have here, this is partly because the Fed has clearly telegraphed its plan for an aggressive ramp up in policy tightening at this week's two-day policy gathering, which begins Tuesday. Officials are preparing to raise rates by an unusual half percentage point, and to follow that move in June with another half point increase, and possibly more after that. They haven't raised rates by more than more than quarter percentage point in any meeting since 2000. Okay, so of course, when I talk about 2000, we are mostly talking about the dot-com crash and also nearing to the the financial crisis of 08. We have never actually went more than half a percentage point increment, which is why this is such a big deal. Okay, which is why the economy is kind of like a little bit shivering. We're just thinking that, will this actually cause a recession? Will this cause a pseudo recession? Is this going to be causing more movement in the market than it actually needs to? That's kind of like the constant worry that we have. The Fed is also likely to approve plans to begin shrinking its $9 trillion assets portfolio starting in June at a much faster pace than during an earlier experiment with passively reducing its holding 5 years ago. Knowing this, much of Mr. Powell's audience will be watching closely to see if he provides new signal about how high officials think interest rates are likely to rise in the coming year or two. This is the most important one of them all. This is the most important one. Okay, just read this one more time. Okay. Watching closely to see if he provides new signals about how high officials think interest rates are likely to rise in the coming year or two. So the thing is that for all the past FOMC, it has always been this case, okay? We don't really care about what is actually being said in the FOMC statement. Well, we do, okay? We do, 50% of them, okay? The other 50% actually go down to the Q&A, where those panelists actually basically ask Jerome Powell very, very important questions. And when Jerome Powell answers those questions, he actually gives us new signals of what is actually going to be happening for the rest of the year. And that's always very, very important because we want to understand Jerome Powell's mentality and his mindset at that current moment, because he is the one that's going to be the decision maker for what's going to be happening for the entire economy in terms of interest rate. So that's going to be very, very important for us to really see. All right, so afterwards, let me just bring this back. In March, Fed official lifted their benchmark federal fund rate to a range between 0.25 and 0.5 from near zero. Okay, blah, blah, blah. Yeah, the rest is a very, very normal, which, like I said before, I'm going to be talking in more details, especially in my own opinion, tomorrow, because that video will basically include everything that I probably have in terms of my own expectation for the FOMC meeting. Is it going to be a 0.5% increment? Is it going to be a 0.25% increment, a 0.75% increment? You might get an unexpected beat or something along that line. So yeah, just stay tuned for that. Like I said before, this is going to be a very, very short news, and I have to rush off in a bit. So anyway, thank you so much for watching. I'll see you guys.